How wealthy are you? I mean, I'm reading that you're $77 billion.
99% of my net worth is in Berkshire Hathaway stock. Every share of that stock has been pledged to philanthropy. So I'm a trustee for that stock. So it'll go to society. And then a good bit of the rest will as well. But if you add up what's in my name, if we go down to my safe deposit box, we will find some stock certificates that are worth that much. But as I've written, they have no utility to me. They can't do anything to make me happier. I'm already happy. I'd be happy with, certainly with $100,000 a year, I could be very happy. And they can't buy anything for me.
Do you have any stock tips for me?
Well, just between you.
Yes. It'll be our little...
The average person will not know enough to know which stocks to buy. They won't know enough to know when to buy them, but they don't have to, because if they can buy all of America through an index fund. And then they just have to be sure they don't jump in at exactly the wrong time, and they won't know what's exactly the wrong time. So therefore, they should put their money in over a period of time, and they'll have some periods that are wonderful and some that weren't so good, but overall, they will do fine over time.
Warren Buffett does not buy stocks. Every company Warren Buffett has ever invested in, from Coca-Cola to Apple Computer, he was taking a major position in a company, not in a piece of paper, and all those companies have one thing in common. What do you think it is? Cash flow. He didn't invest in Apple Computer until their cash flow was so stable. He's a coward investor. He wants to buy real companies that have real assets and that cash flow. He wants a check every month. If you don't find a way to make money while you sleep, you will work until you die. In my case, I'm going to work until I die, and my money will work after I die.
Well, when we looked for the subprime, the reason why we shorted the subprime in size because it was asymmetrical. You're shorting a bond at par that has a limited duration that trades at a 1% spread of Treasury. So you can't lose more than the spread in the duration. Yet if it defaults, you can make the par amount.
But when I got into Wall Street, I had 12, 15,000, which was a lot saved, I started investing it. And in 61, the market was hot. And you never really, I learned a lot from that, because you'd never confuse a bull market with brains. And what I did was confuse it. And I'm buying all these stocks, I'm picking this and I'm picking that. And I had a following of people who would listen to me. Oh, wow. Well, but everybody was making money. You don't realize that. And Jack Dreyfus would tell me, he'd come over, he'd sort of like me, he'd sit there with me once in a while. And he said, you're going to lose every penny you have. I'm telling you, Carl, before you're through it. He said, I got this. I was up to about $70,000, which was huge. He says, you know what? When this is over, 6 months, a year, maybe less, he says, not only won't you have the 70, you'll be negative everything you ever had. And he was right. In 3 days in 62, they cleaned me out. I was and I learned. I tell you what I learned from that experience.
You didn't learn from him just giving you the advice. You had to go through the pain.
You had to go through the pain. You have to go through it. The market is not a gambling casino, and too many people